friends, welcome to Ramsas Deva classes. In the previous video, we discussed about the changes made in the budget 2024 as far as the tax slab is concerned under the new tax regime. In this session, we are going to take you through the changes made in the capital gain tax announced by the finance minister in the Union Budget 2024. So let's begin. So friends, let's now discuss what exactly are the changes made in the capital gain tax in the Union Budget 2024. As far as listed equity assets are concerned, STCG has been raised from 15% to 20%. That is, there is a hike of 5% in short-term capital gain. On the other hand, long-term capital gain, that is LTCG, it has been revised from 10% to 12.5%. That is, an increase by 2.5%. As far as all other financial and non-financial assets are concerned, STCG, these are at applicable slab rates. There is no change here. The changes has been made in LTCG where the flat 12.5% is applicable on all financial and non-financial assets. Another important change has been made to the exemption limits, which was earlier 1 lakh rupees per year. This has now been increased to 1.25 lakh rupees per year. Another change has been made in the definition of long term. 1 year will be for all listed financial assets, and 2 years will be for all unlisted financial assets and all non financial assets. So, guys, we have discussed the changes made on the capital gain tax in nutshell in a summary here on this slide. We will try to understand this with the help of a chart in the subsequent slide as well. So friends, let's talk about the asset wise changes made in the long term capital gain as well as short term capital gain. Also the changes made in the holding period as far as the classification as LTCG is concerned asset wise. In case of listed equity shares or unit of equity oriented mutual funds or listed unit of business trust, the holding period for classification as LTCG has remained same, that is 12 months. Remember the text highlighted in blue, that is there is no change made in the Union Budget 2024. However, if there is any change made, then the texts are red to green. That is, in case of listed equity shares, existing rate in as far as short-term capital gain tax is concerned is 15%, whereas the proposed tax is 20%. That is, there is a hike of 5%. There is no change in the holding period classification as far as LTCG is concerned. However, long-term capital gains has increased from 10% to 12.5%. 10% was on the gains exceeding 1 lakh and 12.5% is on the gains exceeding 1.25 lakhs, which we discussed on the previous slide as well. So as far as listed equity shares or units of equity oriented mutual funds or listed units of business trusts are concerned, short-term capital gain has been revised from 15% to 20% and long-term capital gain has been revised from 10% to 12.5%. However, the exemption limit has been increased by 25,000 from 1 lakh to 1.25 lakhs. As far as unlisted shares are concerned, the holding period is same, that is 24 months. Short-term capital gain is also same, that is it will be taxed at the applicable slab rates. However, there is a change in the long-term capital gain. Earlier, it was 10% without indexation for non-residents and 20% with indexation for residents. Now it has been standardized to 12.5% without indexation. One important point to notice, all the indexation benefits has now been removed and a standard rate of 12.5% is applicable as long-term capital gain tax. So let's now discuss about the listed securities other than units or zero coupon bonds, but including listed debentures and bonds. The period of holding for classification at LGCG is same, that is 12 months. Short-term capital gain is again same. It will be taxed at the applicable slab rates. However, there is a change in the long-term capital gain tax. Earlier, it was lower of 10% without indexation or 20% with indexation. However, it has been standardized at 12.5% without indexation. Again, the benefit of indexation has been removed in the budget 2024. As far as unlisted debentures and bonds are concerned, the period of holding, there is a change. Earlier it was 36 months and now it is 24 months. So the period of holding has been reduced from 36 months to 24 months. Short-term capital gains, again, there is no change. It will be taxed at the applicable rates. However, there is a change as far as the long-term capital gain is concerned. LTCG will be taxed at 20% with indexation. It was the existing tax rates. Now it will be taxed at the applicable slab rates. Also, market linked debentures and debt mutual funds, the period of holding has been reduced from 36 months to 24 months. Short term capital gains will be taxed at the applicable rates. Long term capital gains again will be applicable at the applicable rates. There is no change here. So, guys, it can be concluded that in case of unlisted debentures and bonds, as well as market linked debentures and debt mutual funds, long term capital gain will be taxed at the applicable rates. Also, short term capital gain will be taxed at the applicable rates. So, as far as unlisted debentures and bonds and market linked debentures and debt mutual funds are concerned, both short term as well as long term capital gains will be taxed at the applicable rates. So friends, let's now discuss about other type of assets, that is land and building, physical gold, gold ETF, gold funds, sovereign gold fund and any other capital gain. Short-term capital gain will be taxed at the applicable slab rates. Our long-term capital gain, which were earlier taxed at either 20% with indexation or the applicable slab rates, will now be taxed at 12.5% without indexation. So this will be applicable in all these cases, whether it is land or building, physical gold, gold ETF, gold fund, sovereign gold fund, bonds, or any other capital assets. Short-term capital gains at applicable slab rates, long-term capital gains will now be taxed at 12.5% without indexation. Period of holding has been reduced from 36 months to 12 months and 24 months as mentioned on the screen. So friends, having discussed the tax rates, the changes made in the tax rate asset wise, let's discuss this summary once again. In case of liquid equity asset, STCG is 20%, which has been raised from 15%. LTCG has been raised from 10% to 12.5%. All other financial and non-financial assets, STCG will be at the applicable rates, whereas LTCG will be as 12.5%. With the benefit of indexation has been removed as far as the LTCG is concerned. Exemption limit, which was earlier 1 lakh rupees per year, has been increased to 1.5 lakh rupees per year. The definition of long term has been changed for all listed financial assets, 1 year, unlisted financial assets and all other non-financial assets, it is 2 years. So I hope you have enjoyed this session. Stay tuned for more such updates.